I hit you with a test. Hit you with a little test. You got the music up there. Look at that thing right there. What? Let's go. Oh, okay. Let's do it. Hey, welcome to the Closing Beat, everybody. Happy Monday. How you doing out there? All right, we got the Disney hand. You see it just ever so slightly. I like it, man. Welcome. Thanks for joining us here. We're financial advisors at Jazz Wealth. Hope you check us out at jazzwealth.com. We are done with the rain here. The rain has been intense and just won't quit, but today seems to be our day, so we'll enjoy it today. I hope you all are enjoying everything where you're at. I got a sad bit of an alert here for you. There will be no show tomorrow or Wednesday, maybe not even Thursday. I don't know just yet. The missus having surgery on her foot, so we'll be doing some traveling and then, of course, making sure she don't fall out of bed or whatever. Want that to go really well. So I'll be doing that. I'll probably still do quite a few posts, actually, but nothing directly related to this show, so I do apologize for that. In our notes from Jazz for the weekend there, if you are interested in some of the options expiration data, I told you guys that I would expand on that in the notes from Jazz. I definitely did. We talked about before and after the performance so you can see what's going on, and it's already kind of coming true just a little bit there. We talked about market technicals and where the market stands at the moment, and then FedEx. Holy cow, FedEx that came out on Friday. A little bit of coverage for that as well. We got some great fin tips coming out this week. Those are free. Those are on the YouTube channel, yada, yada. You know what to do. Let's talk about the markets here. The Fed is the big news this week here. They're on a mission to get inflation back down to 2%. And I'm going to show you in a second specifically what they're saying, but 2%, yikes, we got a long way to go. So a lot of people are saying, why don't we just raise rates and then, call it a day, right? We're nowhere near 2%. That's where they want to be. Take a look over here. Here's the current Fed funds effective rate, and I zoomed out so you could see where we came from. This is going back over the last 10 years, so you can see how quickly rates have risen there. Expectations are for this to be the trifecta, the hat trick. I don't know if all that's right. 3 times in a row that they will raise by 0.75%. And I think that's largely baked in. Everybody assumes that at the moment. Now, look at the current Fed funds range. So what they do is when they raise rates, they set a range. Well, if we look at the lower limit and the upper limit of their range, you could see that we are right there. We are right where they want to be. So this Fed announcement, I'm going to zoom in a little bit for you so you can see. This Fed announcement that's coming up that likely takes us up here towards 3 may mean that they're also going to have to raise their range as well. Many voting members are signaling that the range should be 4 to 4.25%. That's probably not new news to you. So nonetheless, that is the big focus this week. That's going to be a tough one there. The Fed is talking really tough as well. I do want to show you some of the data that I pulled up here. If we look at the different Fed members, the dates, and of course I only shared the voting members with you. Look at some of the comments that they said here. Markets are underpricing higher rates for longer. Sooner is better when it comes to the rate hikes and the degree of their tightening. Basically, they're saying the markets should be moving lower and taking us more seriously here. You got George down here. Fed policy can't reverse the supply shocks, spurring prices. In other words, we can't change policy to impact the high prices you see out there. We got Waller. I favor hiking until compelling evidence that we see prices cooling. He wants another significant rate hike in September, which we'll find out in a couple days. And Bullard saying bringing inflation down to 2% is a top goal of the Fed. They currently have only one arrow in their quiver, I guess they say, where that means they're just got to raise rates and keep going and going and going. Mester, she says, I need to see compelling evidence that inflation is falling. We need several months of data to confirm slower inflation. And of course, Powell down here at the bottom there, history cautions against prematurely loosening policy. That's a fancy way of saying you got to go full steam ahead. If we ease up now, history suggests that proves to be a bad thing. History also suggests that it proves to be a bad thing if you go too far too fast, right? We know that from any members, any people out there that track the Fed and all the good stuff that they're trying to do out there. So they're talking tough is basically what I want to try to mention there, which leaves the S&P off to the right-hand side of your page a little bit green, but no aggressive buying out there. Who would aggressively want to buy the markets there? We're down 18% year to date. We're in a position where people want to wait and see. No one wants to aggressively buy, and who can blame them there? Why would people want to wait? Well, if you look at the S&P here, you're already down 5% just last week alone, right? Only the NASDAQ was worse, by the way, in terms of a one-week performance there. We also have the worst 60/40 portfolio returns ever in history. I shared this with you before, just a little bit of an update. If you have a 60/40 portfolio, meaning 60% stocks, 40% bonds, you're getting crushed out there. I mean, not as bad as the market, but still, because bond prices are falling apart and the Fed continues to signal that they're going to do that to bond prices, well, then you have a recipe for both sides of your 60/40 portfolio, 60 and 40, both sides are losing, right? This has never, ever happened, right? Before I showed you guys, a couple weeks ago actually, I showed you the number of times that we'd seen both losses on your stock side and your bond side up to the beginning of August. Well, now we officially wipe all those off and say this is the worst ever, right? It is the worst ever that we've seen. So that's a reason why people say, what am I supposed to buy for? Why am I going to assume that this is the bottom? Very difficult time to do this. Also, the 10-year, I don't know how to tell you this. 10-year hits a new record this morning, actually. So the 10-year hit 3.51, I think is where it ended up getting. That's an 11-year record if you want to sound fancy there. It is trending right along with the Fed rates, their target rates anyway. So this is a little bit behind, but we've got to go up here to 3.5 now. That's a record, right? You go out here, just zoom out. There you go. We're at a record. That's where we're sitting right there. So pretty nasty with that. The Fed is going to continue to push bond prices lower. I just gave you all of the voting members' comments, looking back to only really just a week and a half ago. So we know where we stand there. I don't know what that is. And so we've got this new high here. So that's very, very difficult to try to digest and say, sure, this is where I want to buy. Let's go pick a bunch of stocks and have a good time. One bright spot, though, is, well, there's a couple bright spots, actually. The options expiration data that I shared with you in the notes from Jazz tends to lean towards the week after options expiration being a little bit more favorable there. That's a good sign. And another slightly positive indication is that every single stock market, index, I should say, is oversold in the short term, due for a short-term bounce. So that would be expected there. One other bright spot that I'll put together here for you, well, actually Cody put together for me. So if this doesn't go well, it's all his fault. It's midterms. We're living it. We're here. You see the rhetoric building up, right, between Biden being on 60 Minutes and DeSantis down here sending people in Texas. It's all perking back up again to get people fired up. You see how that goes, right? We're all living life. It's fine. COVID, it's over. And then all of a sudden, politics again. So that's what we're dealing with here. Midterm years tend to hit a little different than other years, as the kids would say. And so we know that they perform differently. I've shared a lot of this with clients. I'm going to share a lot of this here with you as well. There are 5 other midterm years, come to find out. I'll just show you this here. 5 other midterm years where we had already been down 10% or more before the real season started. In other words, through the end of August there. So here's what's happened. 1962, midterm year, we were down 21% going into the start of the midterms. Now, basically. 1966, 1974, 1990, 2002, and then, of course, this year would be in that 18% range, 28 if you're looking at the NASDAQ, but we're focused on the S&P here today. What's interesting, and the reason I call it a bright spot here for you is, let's look forward through the rest of the year. So we were down greater than 10% in all these midterm years. There were 5 that we can actually find. There are no others. This goes back through entire history. So there's 5. Well, if we look through the rest of the year, we have gains 100% of the time. Not magnificent or amazing loss-erasing type gains, but in 62, we gained 12%, erasing some of this loss, 5% here, erasing some, 7 exactly, and 7.92. So it's a rally. We'll take a rally, right? But that's really just for a quarter. So we said, well, let's go further, because a lot of us are investing for the long term. A lot of us are maybe willing to put some money to work. The decisions that we make in a down market affect 5, 10, 15 years out. Huge right now. If you have somebody that's helping you, whether you're working with us or working with advisors or whatever, find someone you can trust that you can just talk to like a preacher and say, I don't like what's going on, but I need something to help me decide if I'm going to buy or be aggressive and do whatever. Well, let's look a year out. When you look a year out, 100% of the time, the market has been positive when the midterm year was down 10% or more leading up to it. So in 62, we got a 27% rally. That year actually turned positive. You got the same in 66, same comments here in 74. You got the same comments in 1990, and almost the same comments in 2002. In other words, if you're looking for a bright spot, and I'm looking, I'm a pretty optimistic guy. I'm looking everywhere for bright spots. You got options expiration data for your really short-term glimmer of hope. You've got every index being oversold for the short-term glimmer of hope. And then you come back over here and you go, well, midterms, man. If this midterm year is going to perform like every single other midterm year, then we've got something to be excited about there, right? Maybe something that we can focus on. Anyways, throwing a lot at you here today. Let's go back over to the stock market. The S&P, of course, slightly higher on the day. The NASDAQ slightly higher, very extended there. You got the Dow slightly higher, and Bitcoin deciding it's not quite ready to give up that 20,000 area there. Gold was a snoozer on the day, and so was oil, which I think a lot of people are okay with. That's in a clear downtrend there. And as you look around the markets, you're going to have the big guys helping the rally in the afternoon here. Apple with a big rally in the afternoon. Amazon coming off of its lows anyways, giving you a big rally. Tesla as well. There you go. That's that pattern from last week. Tesla showing a lot more strength than much more or others of the big guys, the big tech stocks out there. Hey, financials, interesting. They stuck out today. Morgan Stanley, great reversal there. Schwab, also a great reversal and holding up a little bit better than some of the financials. Bank of America, not the case overall, but today was strong. JP Morgan would be the same exact comment there, and I'll hit Goldman Sachs real quick because this is kind of in that, but it gets like a neutral point for relative strength. Not quite, but you wouldn't write it off just yet. Facebook, after hitting new lows, got a little bit of a reversal today, and then you can pretty much just look around the sectors. You don't have to really go in stock picking mode. Utility strong on the day. Want to take a look at healthcare. Big reversal off of lows. Dips keep getting bought in healthcare. Something to consider looking at there. And from last week, we'll take a look at basic materials. It's a little more oversold now. It's not the strongest sector out there, but just seems to be getting a little bit of love as you look around. Speaking of getting love as you look around there, let's try some things here. We'll try a little bit something different, shall we? Earnings, it's a big focus, right? Can you find stocks you want to buy, assuming that some of this data comes true and this really proves to be a buyable dip in the stock market? Well, the first thing you might want to do is look at fundamentals. A lot of people like to look at fundamentals and see that someone or some company is trending in the right direction. Lucky for you, we just had earnings season. Next earnings season doesn't start till mid-October. And so you go, okay, well, let me find some companies that just killed it on earnings and then see which one of those companies the stock price continues to move higher. Is there anything? Could there be? So, for example, we're going to try, this is a little bit ad lib here, but we're going to try just an obvious example. I'm not telling you to buy the stock. I'm just trying to lay my groundwork here, right? First Solar, beats on earnings, beats on revenue, raised their guidance going forward, had a great day on earnings here, was up 12%. It's up 38% since then. What did the market do during that time? Not granted, we had some, solar support from the White House and everything, but otherwise the stock's moving in the right direction there, which makes you think maybe this is just this sector doing well here. Maybe we look at Enphase, if I could type today, and we say, oh, look at that one. That one's doing well. Enphase beats on earnings, revenues, raises guidance, has a 17% gain on earnings day. It's up 19 since then, squishing, consolidating, sort of hovering near highs. Well, that shows relative strength as well. Maybe you don't like that. You say, well, let's go a little bit further, man. Let's look at like Elf Beauty. This is in the consumer staple space. Beats on earnings, beats on revenue, raise their guidance going forward. A more modest 6% gain on earnings day. It's up 9 and trending higher. Market be damned, right? It doesn't seem to care what the market's doing. And if you're looking for things, you say, well, that's cool. I don't really want to chase things, though. Let's try to find some things maybe I don't have to chase. Enphase would be one. If you like a recovery stock, I'm not telling you to buy these. Again, I'm just saying these guys have the earnings behind them, and that's their data, not mine. They beat on earnings, beat on revenue. They also raised their guidance going forward. We got a $43 billion market cap company that's been struggling a little bit. Has the tide changed here? So you're up 6% on earnings day. It's up only 5% since then, but you have a nice trend working its way that's giving you healthy, buyable pullbacks along the way. So there are things to dig up out there. Even in the tech space, you got to look a little deeper here. Here's going to be a little bit small cap, more of a smaller cap company. I actually don't know how you pronounce that. Impanegi. $2 billion market cap. This was pretty small, actually, but it made the scan. Nonetheless, outperforming everything else along the way. Compare this to small caps. Compare it to the Russell 2000. It's going in the opposite direction, right? So there are stocks that you can find if you're looking, but you may consider saying, I want strong earnings, strong growth in earnings, and I'd like to see some support in the stock price, if that's you. If you're a little bit contrarian, you might say, I want a stock with strong earnings, moving in the right direction, given everything that's going on, but I'm okay if there's something that's pulled back as well. So what could we look at? Atlassian. All right, I always say it that way. There we go. I want to try to type it right. There we go. So you look at something like these guys here. So where'd they go on earnings? I put it on my list here. Beat on earnings, beat on revenue, raise the guidance going forward. You got a 16% pop on earnings. There you go. And it's since pulled back about 9%. Is this something to look at for the contrarians out there? We could point out a handful of them. I've got a big old list here, but we don't have to make this the class. Bill.com, same camp here if you want to play with technology. A lot of names that beat on earnings, revenue, and raised guidance were in the tech sector, but they're getting hit, right? So it's a little bit tough there. You got to look outside in some of the utility spaces. This is just coming up with basic scans. See? You got earnings here for Otter. Where'd they go on my list? Otter Tails, a utility, about $3 billion market cap, beat on earnings, revenue, and raised guidance, up 10% on the earnings move. That's this big guy right here. It's pulled back about 10% since then. I don't know if that's a buy, but it's a helpful way to create a watch list there, and that's really all I'm trying to do. Let's move on. Stocks in the news. I rambled a little bit today because I'm not going to be here. I felt like I got to try a little bit harder. You ever do that? You know, you're going to go out of town, you're like nicer to your kids and stuff. All right, Purple, the largest shareholder has offered to buy every single share, I didn't catch the name there, for $4.35. The stock trades at $3.89 today. That's the reason for your 40% pop for them. Good stuff. Says they can do better. AutoZone actually released earnings a little bit early. This is called an off-calendar earnings release because they weren't supposed to do that. They're having a higher inventory issue. They tried to use some of their software and say, oh, look, it's not so bad. We're turning over inventory, but the inventory is still going up. They're not turning it over as fast. The rest of the names on the list for you come as President Joe Biden has declared that the pandemic is over. Congratulations. So we are done with that. And, you know, it's not, I didn't want to make it like a political thing, but I thought, well, let's take a look. Let's look at some larger cap stocks that were beat down the most on the pandemic or during the pandemic. So you got Boeing, $85 billion market cap company, fell the most out of these larger cap stocks here, 57.08%. And of course, they got past the 737, or they're getting past the 737 MAX issue there. You got a recent rally off of lows, back into the downtrend, but could this be the next attempt to break through that downtrend? I don't know. There's a whole list of them, just having some fun here on a Monday. You've got Intel. So Intel in the tech space there, $120 billion market cap. They lost 56.36% and continue to lose, by the way. One of the bigger pandemic losers because now we have an end date, right? So yesterday was the end date of the coronavirus pandemic. And so now we can actually, you know, play some games with some of this and see what's going on. You had to have guessed Delta, right? I mean, you got to guess Delta's in there. That is the worst airline in terms of pandemic losses, $20 billion market cap. Lost 44.35% during the pandemic. Now that the pandemic is over, does that change things? Remember, this week the big news is the Fed decision. So we'll be on the lookout for that. I won't be here, I'm sorry. But remember, there's no show tomorrow and likely Wednesday. I'm trying to do something maybe Thursday for you guys. But otherwise, I hope you enjoyed a little bit of different stuff today. Our Wine and Wealth on Thursday will be done by Eric. Last week, I did a financial blueprint overview trying to simplify not just retirement. We like focusing on retirement. That's obviously the longest thing out in history that you got to plan for, so we have time to make changes. But then we like to come forward. So I was showing clients, like, how do we set up a blueprint here so I know if you have a college expense coming up, if you have a goal in mind, like buying another house or Airbnb or whatever the kids are into these days, I want to help strategize with that as well. That's all included in our service. We don't actually charge for things like that. It's just part of what we do. All right, I'll try to answer some questions if I can here, and then I'm going to get out of the way. Biden was referring to the swine flu pandemic. Oh, no. No, not the case. I caught that that other night. I said, oh, about time, man. That is about time. That was a tough one, going through all that. I don't know how we came to the decision it's over, but I'm glad it's over. You know what I mean? Yeah. This just in. D. Schumann says, wish I had a manager like you 30 years ago. Oh, well, I appreciate the compliments there. Very nice. What's a Disney fact about the California park? Going there next week. You put me on the spot, man. I probably have shared it before, but since you're going there, ruin the haunted house, the haunted mansion for you. You are actually going down in the haunted mansion. So there's a difference between the park over here in Orlando and the park over there. When you go in the haunted mansion and the room stretches out, well, you're actually falling. You're going down under the tracks that they just ran out of space. Over here in Orlando, when you go, the room stretches, you're not actually going anywhere. The room is just stretching. But maybe that work for you. Oh, and hey, when you walk in the front there, look off to the left. You got the firehouse right there. If you look up top, there'll be a lamp, and the lamp will be on. That's where Walt Disney himself actually used to go to the parks, and he would go up there and do his work. And there's a fire pole for them to go down, and they actually had to block it off because one day there were people that figured out he was there, and they climbed the fire pole to go up to Disney's office, which really looks like a living room up there. But you'll still see a lamp that's on every day, just kind of in his memory. Hopefully that was helpful. Still think it's time to sit on hands, even with the stats about the fourth quarter. Well, yeah, day by day. I mean, how do you say today's the day, right? I have to buy. It's encouraging, but yeah, I think it's a day by day thing. Yeah. If you had to pull some money from the market, should you sell your losers or sell your winners? Ooh, that's a good question. That's a tough question because could you use a capital loss on paper, right? Are you one of those that maybe has crypto and so you took a lot of losses already or maybe already realized some of those and you can actually sell your winners? So look at your entire year and say, well, am I going to have a tax bill or not? Do I have other assets that I've sold and I need some losses to offset those gains? You know what I mean? Don't make it just about the position. It's getting too hyper-focused saying, well, that's a losing stock. I've had Intel. Oh, that sucks. Well, only sell it for a loss if it helps you offset a gain or something. Think about that one. Take it a little bit different, a little bit further. Yeah. Doing some tax loss harvest. There you go. Okay. Yeah. Very nice. Walt Disney's rolling. Yeah, well, Walt Disney was an interesting character in general, so I have a feeling he'd be quite opinionated if he were around these days, but you're probably right about some of that. Yeah. Should take The Office to an escape room? I just have had no desire ever to go to an escape room. Never. You did that on Saturday? Yeah. Cody did it on Saturday. Was it good? No, it was we're on the same page there. I just don't think that, yeah, I have no interest in that one there. People were looking at NVIDIA 120 level and Meta at 135. Can it hit? Who are these people? NVIDIA 120. We're 130. Oh, let's go over here. There you go. I don't know why 120. Maybe just some magic support area. Kind of puts you back here at this range. That's probably what they're looking at, the low end of the range. I think it's hopeful. Kind of wishful thinking there because you'd be kind of blowing through all that. So I don't know if I care for that so much. I don't know if you get back down there. MW knows a little bit more about Disney too. Yeah. I like it. When would you be the last day to sell before the end of the year and not have a wash sale? The wash sale doesn't have to do with the day of your sale. So that question's just a little bit backwards there. You could sell on December 31st and have a loss on paper, right? The wash sale applies to when you buy back. I don't know if I don't know if that's what you were trying to say there. Yep, that's how it works. Or if you search our YouTube channel or our client portal, you just search wash sale. I don't know, maybe there'd be something there to go more in depth, but you just asked the question a little bit backwards there. All right, speaking of backwards, I'm going to get back to work here. I hope you guys enjoy the rest of your day, and thanks for putting up with me. I was doing a little bit of rambling about some different topics today, and I will see you as soon as I can get back, but there will be no show tomorrow and Wednesday for sure. I know that for sure. Enjoy, and thank you for hanging out with me.